Good morning everyone and welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Wednesday the 19th of February. Overnight we've seen a mild improvement in risk appetite once more. Nothing significant has been seen. I mean, if you look at the trends of the new cases of the coronavirus and the number of deaths that are seen on a daily basis, there is an improvement in those statistics. And also the Chinese government are claiming that businesses are getting back to normal. But it'll be interesting to see how far this risk rally goes, because at the moment we're still getting a lot of concern coming through surrounding how the outlook for growth is pulling forward. And you can see that gold has broken out above $1,600 in the last 24 hours. That has been a really key move. And the risk rally that we've seen this morning has not really been joined by bond markets. Yields are still fairly subdued and not really picking up. So we have seen this knee-jerk higher in reaction to this news, with equities higher. But not really showing through on bond markets. The yen is an interesting underperformer today. That has resumed, actually, that yen underperformance. And the Aussie and the Kiwi, both stronger, also hints at a better risk environment. But it'll be interesting to see if this risk rally can continue. You've got the Chinese yuan, which has strengthened back under 7 against the dollar, which is tends to be seen as a bit of a benchmark, doesn't it, really? But nothing too decisive yet. But ultimately, equities have been continuing to grind on their way higher, even amidst the selling pressure that occasionally does tend to come through with some bad news flow surrounding the coronavirus. But we can see that S&P 500 hasn't really come back at all, has it? And you've got futures, which are again about 0.2, 0.3% higher early morning today. So we're still looking for a sustainable traction move, but in risk, but as yet not quite there. But certainly the yen is actually weakening against the dollar, and that could be a bit of a signal that markets are starting to take a bit of a hold in terms of more positive risk environment. In terms of data points today, we've got UK inflation at 9:30. That has actually just come out, and what we've seen is UK inflation just ticking mildly higher than expected on both core and headline. And that has helped sterling to remain supported, and it's back above the 130 big figure against the US dollar today. Into the afternoon, looking out for building permits and housing starts, both expected to be sort of around about a bit higher on building permits, a bit lower on housing starts. And then also another another inflation figure today for the US is factory gate inflation at the PPI level, and it's expected to tick back higher on both core and headline on the PPI. You've got the Fed minutes tonight for that meeting from January. It is a bit of a non-event of a meeting in due course, but we'll be looking out for any sort of suggestions of the committee being concerned by the coronavirus, but also inflation is always going to be an important factor for the Fed. So any comments on inflation will be well looked at. Okay, so in terms of my chance of the day, we've got the German DAX today. A little bit of a pull back lower yesterday on that news from Apple, and that it's going to miss its revenue expectations due to the coronavirus. But we've seen markets again using any weakness as a chance to buy. Certainly equities rebounding higher again today. That breakout above 13,640 basis of support now. You could argue there's a band of support, 576 to 13,640 is a basis of support. Yesterday's low, 13,660. So basically back to that point and then rebounding today. That shows a sign of strength. You've got momentum indicators which remain pretty strong, although not especially strong, considering they have just started to roll over slightly, but given the fact that the market is consolidated, it's pretty much in line with that. But the unwind back to 13,640 seems to be a buying opportunity. 13,795 is that all-time high on the DAX, and you'd be expecting to see a retest of that in due course. You've got momentum on the hourly chart, strongly configured MACD lines coming back towards neutral. That's a chance to buy. You've got RSI again picking up around the 40 mark. So continue to see corrections and weakness being bought into on equities, and the DAX looks no different there. So that looks like we're positively positioned for the DAX to break out above 13,795 and looking higher in due course. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.